Great. So the agenda for today is pretty full. We're trying to wrap it up in an hour. We'll have a session on Q&A for the participants also, but we will ask the participants, the industry experts, some questions ourselves. So if we can move to the agenda, please, Minhal. So what we'll do now in this session, we will give you an overview of the trends and the reporting, ESG trends and reporting guidelines. We will also talk about, if you go back to the previous slide, Minal, why ESG is becoming important for GCC countries and what progress the GCC countries have seen in ESG, both in terms of regulation as well as overall framework development. And then we will have discussion with the panelists. We will open the floor for participants to ask questions, and then some takeaways for the participants, which we have brainstormed together with all the industry experts for your benefit. So I'll introduce the panelists. We've got fantastic panelist group. If you move to the panelist session, please, Minal. So we've got Rehan Zulqadar. He's a corporate governance risk specialist. Have been in the industry for good 25 years. Been a CRO of number of banks. Understands the governance body framework for central banks, mostly in Middle East. We've got a gentleman, very thorough professional, seasoned professional, renowned renewable energy and policy expert, has worked in Australia, Middle East, Central Asia, and Southeast Asia for a number of years, 15 plus years of experience. We've got Osman Masood. He's an energy efficiency consultant and change management expert. He's worked with World Bank for the Africa and MENA sector, and he has worked on a number of assignments for energy efficiencies in the EU and the UK countries, EU countries and UK. Moving on. So I'll pass the baton to Minhal. Minhal is a manager, senior manager with athGADLANG, has worked with multiple consulting firms in past, has worked with has seen the ESG from an investor point of view, worked on multiple assignments to evaluate and categorize the ESG evaluation for a number of investment companies. So Minal, without further ado, I'll pass the baton to you.
Good morning and good afternoon, everyone. So I'd like to start with what are the global ESG trends and reportings that are happening all across the globe. So about $30 trillion have been invested in ESG up till now. Since it's been a 40% increase since the days for the last few years. Capital market have increased the climate change investments have been rapidly been increasing with the passage of time. Global capital market is expected to be 75% within the mandatory reporting disclosures. Moreover, the regulatory frameworks are also shifting, with CSRD being a directive for 50 that applies to 50,000 companies. SEC, US SEC is also applying to multiple organizations. G7 and G20 is also focusing on that side. Furthermore, the main concern is the quality of the ESG data. So this is where the best practices regarding the credibility of ESG and assurances come on board, third-party assurances. Moreover, this stakeholder capitalism will gain momentum once because the investors nowadays are getting more and more concerned about what kind of data the companies are reporting. So it will be the first part will be taken by the investors from the stakeholders who will be taking on board this information. Furthermore, why ESG matters for GCC companies? That's the bigger question. Because multiple regulations are coming on board. We just recently saw that Qatar Central Bank recently disclosed ESG reporting guidance aligned with TCFD and other regulatory requirements. Bahrain government recently published a mandatory reporting requirement for multiple listed companies and banks. It also helps you in attracting global investors. It helps you in managing climate impact. Recently, commitments made in Egypt at COP27 by KSA in UAE and in COP28 just recently closed down. Multiple commitments were made that can easily be made sure once these things were attended, once these things are attended properly. Moreover, we could easily leverage technology in these numbers being generating in reporting these numbers. Moreover, we can see that 70% of the population is under 30 in GCC. So we need to create a resilient community. So there are multiple regulations that have been initiative in the ESG regulation. We can just give you a brief introduction about each of them. Recently, Dubai Financial Services issued an ESG regulation that focuses on risk management and governance issues, whereas Saudi Arabia, Tadawul has recently, in 2021, they have disclosed a regulation, but it is a voluntarily reporting structure for the listed companies. In Qatar Financial Center, there are multiple climate risk reporting structure aligns with the TCFD. In Bahrain, as discussed earlier, a regulation was introduced in November 2023, from in which all the banks and investment companies, along with the listed companies, are required to report the financial the ESG reporting from 2020 December 2024, and the first reporting would be mandatory from 2025. That is to be submitted to the Central Bank of Bahrain. Similarly, for Oman, capital market authorities have mandated for listed companies to report annual ESG matrix.
I think just one thing I would add here, Minhal, that the momentum is there. You can see how the regulators in the GCC have one by one started making the regulations more mandatory. So it started with the flow from UAE, and I just started sort of continued the flow with the first one, Bahrain, to be the first one to make it mandatory for certain listed regulated entities, mostly covering in that, not all, and the listed companies. So you can see the momentum will continue, and you will see more of these coming into the rest of the GCC becoming mandatory disclosures. And disclosures are not just disclosures, you have to do a background work, and we will talk about that with our experts. I just wanted to give you that particular sort of insight that the regulators are talking about it a lot more than what you think or you may know about. Please, Minhal, if you can continue.
Sure. So major development, as just mentioned, is Bahrain is mandatory reporting. It applies to large insurers, companies, banks, category 1 and 2 investment firms. It's aligned with GFCD, GRI, SASB, and WF matrix. The major part related to governance is board oversight responsibilities, reporting for non-compliance, steps taken to comply with PDPL regulations and laws, dedicated committees, policies, and actions. Climate risk management policies have been in place related to risk identification and mitigation, reporting of total energy consumed and breakdown on type, disclosure on amount invested in annual emissions reporting. Social and capital has been quite discussed in detail related to workforce diversity, pay equity, training, employee turnovers. Moreover, enabling factors include data privacy, whistleblowing process, investment community, and more. A further detailed overview of this document can be reflected from our checklist that has been circulated. It will also be emailed to all of the participants after the session. Quick highlight of the CBB checklist.
So what we have done, we just pulled out the prominent parts of the central banks of Bahrain's guidelines and just summed it up in a piece of checklist for the consumption. This has already been circulated to the wider pool of audience, but this will now be emailed to you individually as well. All the participants will receive it, inshallah.
The bigger problem comes when you are reporting these frameworks, when you are adapting these frameworks. The initial issue is prioritizing unique regional and local issues. And the other bigger problem is data limitations. You are not able to identify the numbers that you would like to report. Moreover, balancing standardization and relevance. For some industries, some numbers are relevant, whereas you cannot identify what are the standard best practices to those numbers. Moreover, regulatory fragmentation, risk over underreporting, of over-reporting or under-reporting. You may report more, or you may report less. That's a bigger question. Furthermore, building capabilities of developing resource. We do not have multiple resources in the region, in the companies, within the country. Those can help you out in structuring all of those things. So I'll leave the questions to the panelist.
So I think I'll just circle back with the issues you've highlighted. So if you can go back to the previous slide, Minhal.
Sure.
These seems very small, but we've been working with a number of clients, and they have been having multiple issues. You know, when you're talking about financial data, we had IFRS has been in existence for n number of years, and we have over the period of time managed to understand the requirement and secure the data for larger organizations as well. But when it starts talking about qualitatively different parts of information from different parts of the organization, which have never been told or trained to pull the data in such manner, you will see a lot of limitations of that. So a proper exercise required for understanding the entire structure of what information is required, pulling out the data, whatever the limitations are, then ironing those out, standardizing the and relevance of that data is required, and putting that in a framework to make sure that the reporting remains relevant and appropriate for what you want to talk about and disclose from an ESG standpoint. So I'll ask these some questions to our experts. We've got the honor of having brilliant experts with us. We got. I'm very pleased to have the energy policy expert with us, Mr. Qasim Saab. Mr. Qasim, we would love to know how would you assess the current stage of sustainability reporting and adoption across GCC in comparison to global peers? You've been working internationally. You've seen what GCC is doing. So what's your view in this regard?
Okay, first of all, good morning and good afternoon. I think we got participants from all over the world. So it's been a great pleasure to be part of this webinar and to be on the panel. I think the sustainability, if we go back, it starts from the last century, all right? So GCC or Middle East, we know, is usually a hydrocarbon economy and was a economy powerhouse for the entire world because industrial revolution, agriculture, everything was dependent on the few hydrocarbons. So if we see the sustainability reporting started from last century, but when we went to this 21st century, the things have picked up because if we look at the first 2 decades, we can see we had a Great Depression in 2008. Then we got a COVID coming in. We had after 9/11, there was terrorist attacks. So there are a lot of factors that are come in that the organizations or the companies were not used to be aware of those. Like there were multiple factors that have started impacting their businesses. So I think with this, the companies have more focused on sustainability reporting to get their stakeholders and even their shareholders' confidence, and even the financial institutions that are supporting their projects or financing their different projects. When we compare to GCC with the rest of the world, if we look Asia Pacific, we look at America and Europe, I think right now GCC is a bit far catching up with those 3 regions. Asia Pacific, like when you look at Singapore, Australia, Malaysia, they are pretty high up on sustainability reporting. Like if you look at their statistics, almost like 90% or more than 90% companies are reporting on sustainability annually, or they're submitting their reports. And whereas GCC, we got like around 50 to 60%. So I think we are still, GCC is catching up, but the good thing is they are working on it, because we recently, as Minhal mentioned, that there are some frameworks or reporting guidelines that are coming in, especially with the IFRS 1 and 2, and the regulators are asking for voluntary or mandatory reporting. So we'll see the trend changing, and hopefully we'll see that we can catch up with the rest of the regions like Asia Pacific, American, and European.
And when do you think that would evolve and would start seeing it being mandatory? Do you think that it will come faster than what you have seen in the rest of the world, or you feel that it
Yeah,
will
I
take
think
its own
as you
sweet
see,
time?
the Saudi Arabia, the Bahrain has already said the mandatory reporting. So it's just like a first step. Like if one country or one region does it, then rest of the countries will follow the lead. So I expect that with Bahrain taking the lead, the rest like Saudi Arabia and Dubai and Kuwait, Qatar, they will follow the path as well. And we maybe next couple of years, I think we'll see it make from voluntary to mandatory.
Thank you, Mr. Qasim. And so I was just wanted to ask Mr. Osman, so which GCC industry does you think that are demonstrating leadership in the ESG disclosure and performance management? We have seen some voluntary disclosures coming out by some large regional players. But where do you think that the tilt has been so far?
Good morning, Arshad, and good afternoon to all the participants. Thank you for the question. So, in relation to the leadership in, for the ESG disclosures, although it's in its infancy within the GCC countries, but there are certainly, certain sectors that are, stealing the show, which is in relation to energy and utilities. So, companies like Saudi Aramco, they are investing heavily in projects, that are related to renewable energy. Then we have finance and banking, in that sector, Emirates NBD, when they are looking at, developing green finance, they are, in collaboration with other elements of the banking, they are producing such elements, that incorporate ESG from the start. Then we have real estate developers like Emaar in the UAE that have got building structures that are being built, bearing in mind, the carbon emissions, and also, looking at LEED certification. So, silver, gold, and platinum statuses for their projects, and then if we zoom in kind of situation, and look at specific companies, so if you talk about Masdar, the Abu Dhabi-based company, they are pioneering, elements in renewable energy. Then we have got the Omani LNG, so they are looking at elements in relation to, the renewable technology in. So, if you look at the overall GCC market, there are big players. Like I said in the beginning, although it is in its infancy, but there are plenty of big market players who are taking lead in the ESG disclosures. Like Minhal and Qasim Saab also mentioned, that although the disclosures are not mandatory at this point in time, but a lot of big players in the market are taking leadership, in relation to disclosing, the ESG performance, So I think personally speaking, it will be a bigger, better situation, in next 24 to 48 months, when the smaller SMEs are also in line to disclose their disclosures as well.
And that leads into the next question very swiftly. I've been talking to a few large industry practitioners, some governance board members and CEOs and CFOs of the company. And when you start sort of talking to them and giving them a bit more about the advantages of the transparency and the disclosures with regards to ESG, and that's where the excitement is coming. So not from all the loud and clear voice coming out from the market, from the whole ecosystem talking about ESG. That needs to be sort of more maybe inculcated in the DNA of the businesses, or at least the large ones. So I was talking to an organization which was running a 15 billion riyal business and have not sort of even thought about doing any ESG related work thus far. Again, they were not mandated, so not being a listed company, it was a family office. But that Rehan, what do you think the advantages the GCC companies can gain by investing in improved ESG reporting if they are not mandated? And I think swiftly getting into this question, Rehan, what's your view?
Assalamu alaikum, everyone, and good morning, good afternoon, and good evening, because we have also participants joining us from across all of the globe. Thank you, Arshad, for the question. One of my favorite topics, GCC companies can gain several advantages by proactively improving their ESG disclosures before sustainability reporting becomes mandatory. We can start from first. It signals leadership and forward-looking and thinking to investors, leaders, and government agencies which are planning to make capital allocation decisions. This provides reputational boost and comparative distinction. Secondly, by leading measurement and reporting processes, organizations can identify and address data gaps early, at a very early stage. Establishing the baseline standards for themselves, materiality, target setting, which will enable them for emissions, water storage, etc., etc. Thirdly, introducing strong governance, oversight, executive accountability mechanisms, and assurance processes leads to enterprise maturity. Finally, proactively public disclosures serves as change management leader to teach combine mindsets, upskill workforces, and align frontrunners. So that's my viewpoint of the question.
Great. I think that multiple benefits then, and given that we work with a large fund in the States, it manages more than 50 plus investments in the region. And you would be surprised, some of you, that they have made certain decisions for de-investing in the companies, certain companies which have not been taking the ESG disclosure seriously. So, Mr. Qasim, coming back to you, so how can sustainability disclosure supports companies licensed to operate, raising and rising stakeholder expectation, as I just mentioned? So, what do you think? Where will that lead now?
Yeah, I think you had a very good question. And sustainability reporting fosters dialogue and engagement with stakeholders such as customers, employees, and regulators. And this engagement of the companies help understand the stakeholders' expectations. So they build trust and they help them to maintain their social license to operate. I think that's is a key in building trust between the stakeholders, like various stakeholders, their suppliers, shareholders, the employees as well. So by providing stakeholders with comprehensive and transparent information about their environmental, social, and governance performance, I think companies can demonstrate their commitment to accountability and responsible practice, because sustainability disclosures, I think, brings accountability and transparency for all the stakeholders of an organization, specifically their shareholders or their financial institutions to whom they are reaching out for borrowing money. So beyond transparency, disclosures offer a platform for the companies to proactively address stakeholders' concerns. And it's not, as you mentioned, like it's just not like disclosures. It involves the background working. I remember working in Australia. For every business case, there was a separate section for sustainable reporting, ESG reporting. And based on the ranking, the project was gauged based on the ESG ranking. Like what are the environmental impacts? What are the social governance? So it was very key for any organization to approve a project within internally and even externally from the financial institutions. So I think effective sustainability disclosure serves a valuable tool for identifying potential risks and opportunities. And I think it's a proactive approach for any organization to do it, because in the current environment, there are a lot of unknowns that if we do this disclosures and put some thought process in it, I think there are a lot of risks that can be mitigated, and companies can, I can say that they can perform well. They can improve their performance for their shareholders and for the employees as well. So sustainability disclosures, it's just not reporting, as you mentioned, engaging with the communities, building partnership. You can share, the organization can share the goals, what they think they want to achieve, like maybe in 5 years or 10 years time. So based on that, it will build the confidence for the stakeholders, the shareholders of the organization. They will know which is the right organization to invest in. So I think it's a very key, and it gives a license to operate for any organization.
And I think one question which comes to mind, and if I just will throw it at you, Mr. Osman, that people do ask questions. So if you were to link these disclosures, KPIs to incentives of the executives, how would that sort of pan out? Do you think that is something which you've seen in the rest of the world, other parts of the world being done, for people to actually be able to make sure that they get pushed to do more work in this area?
Thank you, Arshad. Yes, that's an interesting question. And, in the recent past, there has been much hype about it. This has been discussed in, a lot of board meetings that I know about, where the senior management is not concerned, but, they genuinely want to know, how this reporting can be coupled with the KPIs of, the management that they have, And like rightly, Rehan Saab and Qasim Saab have mentioned previously, that these disclosures are not just any, we're not just publishing numbers and figures, the whole idea, and eventually, there will be regulators, especially, what GCC countries can be like, so there will be regulators who will enforce implementation of these, so my personal opinion about this is that, this is the disclosures are going to be linked to the KPIs of the senior management, and that will be cascaded through, the CFOs, and, eventually the compliance team. And more importantly, in relation to what you've asked about, what is the temperature like in the rest of the world, I was actually reading a study published by Harvard Business School from 2022, in which, the companies where they have linked the the salaries, in terms of the pay rises with the ESG reporting and the compliance, those companies have seen 25% growth, in terms of higher returns for the shareholders over a 10-year period. So that study has been published by Harvard Business Review. Okay, it is there in black and white, and I personally think, like I said, eventually, there will be businesses, forget about the regulators, but there will be businesses who are going to link up the salaries, pay rises, bonuses, and all that kind of malarkey with ESG reporting and compliance. Not just reporting, but compliance, making sure that their compliance matrix is all looking green, so that will help businesses move forward. Thank you.
That's a very, very good point. And for that, what you need to do is just the tone at the top has to be set. So Rehan, what do you think the boards, are they geared up to this? Do you see the level of knowledge and the push from the governance as part of the body, part of the organization, being aware and then pushing to fill this gap in the organizations?
Thank you, Arshad, for the question. First is the awareness. I strongly believe that the tone is always set at the top. Many boards still lack clear oversight structures and accountability processes on ESG issues. Secondly, establishing a dedicated sustainability committees at both board as well as management level helps prioritize attention. Thirdly, competency building is understanding a risk across climate, social, and ethical dimension is needed. And again, I agree with Mr. Osman that obviously linking executive incentives to verified ESG KPIs improvements also signal strategic commitments. And finally, the question is how you can address those gaps. And the answer is very simple. It's ET. When I say ET, it means educate and train.
Great. So, Qasim, what do you think that the governments of these of all the GCC countries needs to do more to encourage the voluntarily sustainability reporting? Given some of the countries, in fact, only one country has sort of will make it mandatory in next year or so. So this year disclosure, for example, 31st December 2023. There will not be any requirement for making any mandatory disclosure. So what government can do to further encourage the disclosures?
Yes, I think government ownership is the key to the success of any initiative. Like similar, we've seen this previously in health and safety. Not all the organizations were following until unless the government supported it. And similarly, I think we see that there's a lot of role of government to do it. As we've seen, the Bahrain has taken the lead. They've mandatory. They've done the mandatory reporting for sustainability reporting. In fact, several GCC countries have already begun to implement some support mechanisms. Like we know what the issues could be, like awareness, okay, limited resources, and fragmented regulatory landscape. So we've seen that regulatory landscape it's evolving as the different countries are moving from voluntary to mandatory, and within the organization. Previously, it used to be like sustainability wasn't a separate department, like similar to strategy or anything. They just leave it as alone. But I think the companies should move, and they should move to have a sustainability reporting or ESG as a separate section within them. So GCC governments can play a significant role in encouraging voluntary sustainability reporting by implementing a range of support mechanisms. One of them is awareness raising and capacity building. The other is financial and technical assistance that they can implement and support the organizations to do it. Third is regulatory, as we said, and public awareness. is very, very important. So one thing that they can do, various regulatory organizations, they can organize an annual workshops or seminars where they promote that which companies have been reporting sustainability reporting and how they've been doing it. So they should award them some incentives. So this is how they can promote sustainability reporting in GCC region.
No, I think we've seen the push from the industry, from the government bodies, and of course, when you're trying to shake up the entire ecosystem to do certain things, it takes time, and a lot of consultations are being done as we speak. But then
Yes, you're right.
from our side also, so we know there are a lot of information sharing forums and working groups and peer learning, which is happening at the moment, and we've done some from our side as well, trying to sort of build up a network of ESG experts like yourselves and others, so just coming up with multiple ways of making it much more easier than what it feels like. But Mr. Osman, what do you think that the forums and the reporting best practices in the region, the participants can look up to?
Thank you, Arshad Saab. So I don't want to blow my own trumpet, but my sincere advice to all the participants would be to stay tuned with athGADLANG in relation to the social media updates, the LinkedIn page, our website, and so on. Because you have to understand, and like I said, not blowing our own trumpet, but you have to understand that, one, this topic is in its infancy. So there are, a lot of companies, there are a lot of corporations out there who are not sure about what to do. Second, it has a lot of intricacies that need to be looked at from the financial perspective. If you look at, the reporting structure, standards, the S1, which is linked to the financial aspects, and then you have the S2, which is the in terms of environment reporting. So that is why it is very important that whoever you're following has all that information. Other than athGADLANG, there are quite a few in the region, for the GCC countries. So there is World Business Council for Sustainability, Sustainable Development, the Global Reporting Initiative. Then we have the Emirates Environmental Center for Sustainable Development. The Saudi Green Building Forum is there as well. But like I said, there are a lot of social media platforms as well. But stay tuned with, I would request with us, Minhal will get in touch with all the participants, to send them the updated checklist and all the services that ATH can offer as we move forward. So that is, that in relation to the forums. Thank you.
Yeah, and I think there is a sort of World Economic Forum also have developed a separate section on their website. So that's where you can also get a lot more information for individual countries also. And just be sort of just keep your eyes open. There's so much happening around. So when you hear the word sustainability, and anybody is talking about it, I think you should just sort of grab that opportunity and just listen to what other participants, market industry practitioners are doing in this regard. You've got the governance practices, leading practices should rapidly emerging in the family conglomerate businesses and how they're embracing it. Having worked with a few family offices, Rehan, what do you think that are they getting to the grips with the requirement as we speak?
Thank you, Arshad, for your question. I think first we have to take a step back and understand the governance structure or operating model of family corporations. Once we understand that, then comes the part of awareness, training, responsibility, etc., etc. A very important element is also the cost factor. It's very easy for me to say to appoint a chief sustainability officer, but practically that might not be feasible. So to begin with, my suggestion would be as follows. Make someone responsible for ESG within your organization. It would be the CFO, compliance officer, risk officer, or your investor relations officer. Add ESG as a permanent agenda item on your meeting committee, management committees, as well as board meetings. Introduce paperless environment, focus on energy saving, and the list goes on and on. But as the Chinese proverb say, a journey of 1,000 miles begin with a single step. So I would suggest let's take the step together.
Great. So I just wanted to sort of get a feeler from the audience, and I'm seeing that there's a lot of Q&A questions have been asked in the chat box. But Minhal, we've done a small poll for getting a flavor of how much you already know. I think we've given some these industry experts have parted some really valuable knowledge. I think we would love to for the participants to take part in this poll. There are 5 questions really, just to get a flavor of where we stand. So how would you currently rate your organization's sustainability reporting capabilities? Do you think that they're just getting started, early stage, ad hoc disclosures are being made, formal reporting processes in place, or very mature integrated reporting has been already taken place? So if you can start sort of answering the questions, we'll pull out the answers upon closure of this poll. What is the most driving factor for companies' motivation to pursue ESG disclosures? Do you think that the external regulatory reporting, whoever's been doing the disclosures, stakeholder pressure, leadership commitment, competitive advantage, risk mitigation, or you're not sure about it? So which sustainability reporting frameworks, the multiple reporting frameworks have been on the horizon, but which ones you have been sort of taking as your grandfathering framework? So SASB, TCFD, GRI standards, or integrated reporting, or any others you've been working on? And how high the strategic priorities, sustainability data measurement and management for your leadership? So are they focused, not currently, very moderately priority, emerging priority, or strategic priority? And to best of your knowledge, do you think that who will be responsible for carrying out ESG activities in your organization? Rehan just mentioned a few, but do you think the CFO, compliance officer, risk officer, investor relation officer, or a legal department would be the best one to take the leading role in the organizations? So just wanted to hear out what your knowledge is like. And then you will be surprised. And I wanted to ask one more question actually to the audience, that how many of you have actually read any of these standards so far, in summary or in full form? That would also sort of, and I would strongly recommend, it's all about sort of knowledge also, not just the capabilities you hear from the consultants here. You might want to just sort of put out the book and then read by yourself to get much more understanding. So if you can close the poll, Minhal, and see what participants have that have given us a feedback. So you can see 69% of you are just getting started. Not a single one has got mature integrated reporting done. That sort of rings a bell. So the driving factor is external regulatory requirement, mostly, predominantly. And that's a bit alarming, actually. Having all the discussions on environmental, social governance at the moment, if the push is only because of external regulatory reporting requirement, then I think that you're containing that to a longer term objective of the organization. I think organizations will struggle. It should be more from a leadership commitment, that they want to be more transparent to the wider stakeholders. It's interesting to see that you've got other is around 38 and integrated reporting 41%. The standards are just being sort of worked through to So I would be interested to know at some point if you can write down what other standards you're following. You're seeing that around 31% are moderately making it priority. That's becoming emerging priority, which is really good. That you think that this is becoming important for the organizations. And rightly so. I think compliance officers, we've been having a debate, and whatever we have seen so far internationally and locally, compliance officers, it's just a mix of between compliance and the finance officer. Investor relation also takes plays a significant role in that, given that most of the reporting actually goes via investor relation. So fantastic to know what you think collectively, but it's very clear. If I were to go, the top question is that it's just not that focused at the moment, and the organization is still working on as we speak. So I'm gonna, in the interest of time, what we will do, we'll just pick a few questions. If you allow me, all the participants, I'm talking on your behalf, to pick up a few questions only, throw it at the panelists. And I've seen these questions, and some of them are really relevant, and some of them have been already answered by the panelists while we were sort of going through the whole material. So Sanjeev says that when do you think the ESG standards will become mandatory, and they're expected to be quite extensive in terms of qualitative and quantitative disclosures? And Sanjeev, we've discussed it, that it will take some time, but then Bahrain has already started working towards that area. So I think Lenovo is not the name; is the name of a mobile. So I'm not sure who asked that question, but the companies that are not in the list of compulsory filing for ESG, can they go for it voluntarily? Um, so what do you suggest, Mr. Qasim, that are they putting themselves out there by putting too much voluntary disclosure, or do you think that market should start working on the voluntary disclosures, Mr. Qasim?
I think, as we discussed, they should start. As you mentioned, that it should be leadership commitment within the organization, that they should do sustainability reporting disclosures, and just not for their stakeholders, but also to improve their organization's performance and the way they do the business in this current scenario, where there are a lot of unknowns, which they have to be proactively to identify the risks and mitigate them. So I think it is good, even if it's not mandatory. I think they should do voluntarily within the organization. It would be good.
Thank you. Abdullah Masood has asked a very interesting question. So saying that how could this impact the SME sector in the KSA in the next 12 to 24 months? And what do you think the key stakeholder would be expecting from the companies operating in the investments or a startup venture industry? What do you think, Osman, about this?
Like we've discussed, quite extensively, my personal opinion on this is that, behavior breeds behavior. So in relation to, sorry, I was trying to read the question, but it's disappeared now.
Sorry?
I was trying to read the question, but it has disappeared from my screen.
Yeah, it's talking about for the startup ventures and investments companies. So, although given that the investments, the investment firms are looking for disclosures, and for the companies which are taking ESG seriously. So the question was, what do you suggest for the next sort of 12 to 24 months, how this will evolve for the investment firms and the startup ventures in terms of disclosures?
Thank you. It's come back on the screen. Sorry, I'd scrolled way past it. Sorry, apologies. Yeah, so like I said, behavior breeds behavior. So at the moment, Bahrain is the only country that has taken lead in terms of the mandatory disclosure. Other countries will follow suit as well. And it's just like, consider yourself, you've gone out on a holiday with friends, and you're stood on top of a peak, and underneath that there is a lake, and all of you, are deciding as to who is going to jump first. So whoever takes that leap of faith, is going to be glorified amongst them friends. So we are at that stage, although it's in its infancy, but we should know that this is going to become mandatory. There are going to be regulators who are going to come out and who are going to enforce these things, and eventually the spectrum is going to broaden, and the startup ventures, the investment firms, the real estate agents, all of those, they will be taken into stride, and everyone will have to disclose. So the best practice is to start off now, rather than waiting for the mandatory disclosures. That's what my sincere advice to the individual would be.
I think
And
the way
Arshad,
you
if I want to
please.
if I want to add on top of what Osman has said, and as I mentioned in my question, answer to my question earlier, that for SMEs and startups, especially in KSA, if you start, developing your ESG frameworks and standards, so it will become easy for you to go to the lenders and government agencies and investors, because at this point of time they are planning to allocate their capital decisions. They are in the process of doing that. So it becomes easier for them to take a decision to invest in an ESG project rather than some other project which is not ESG compliant or doesn't have or haven't started working. So being a startup and from an SME, it would be a great help to you if you start working as early as possible on ESG framework.
And then both have sort of made a valid point, and I totally agree. I have been party to a few due diligence assignments for a small startups as well as large petrochemical company, and you would be surprised that how much weightage they have given to ESG scoring of that investee company. So to answer your question, I think more focus should be on that, as well as other areas. Minhal, you forgot about Kuwait. What's happening in Kuwait? Hussein Nasir is asking that.
So, multiple regulations have been introduced for listed companies specifically, whereas nothing has been concrete or mandatory for now. But as we've seen, the wave has been going in mandatory disclosure point of view. So we expect that mandatory disclosure reporting structure for all the GCC countries should follow up in the next maybe 3 to 4 years. So it would be efficient that companies should start getting up themselves in the initial phase. They should start reporting some of the basic numbers. And these things, and when the mandatory reporting comes on board, it would be easier for them to adopt these structures and models.
And I'll pick up one last question. I'm just in the interest of time, and I know that these questions are there, and all the participants, I can see none of them have actually left. But I understand that people might have other commitments or meetings lined up. But just one question, which is a very valid point, Mr. Saqib has raised. So what should the companies do as a starting point when they have not done anything on the ESG agenda at all? So sort of baby steps, if you like. What do you think, Mr. Qasim?
Yes, I think for any organization who's just starting up, for basic, they can start doing environmental and social checklists within their organization. And if as Usman said, they include as part of their KPI internally. It's nothing to do with the reporting, so that they prepare the organization for eventual disclosures and reporting to the regulator. So I think if annual assessment or appraisals, they are linked to one of the KPI that is associated to ESG, that's one internal thing that any organization can do it without being any reporting to third party or regulator or disclosure reporting, like mandatory or voluntarily.
Qasim, if I
yeah,
sorry.
Minhal,
I want to say on top of what Qasim has suggested. So as I mentioned earlier, that We should put this ESG as an agenda item, as a permanent agenda item for our management committees and board committees as well. And then another thing is that we should make someone responsible in the organization to begin with.
And Minhal, you wanted to add something also?
So for starting point, the companies could engage into the 30-minute exercise of what the current standing of their ESG reporting is, what kind of basic data they can extract from their numbers, from the human resource, or from their board level, or from basic level of ESG reporting requirements. They could start understanding basic GRI standards from where they could extract information, and try to create a framework, or to further enhance their reporting, or to further improve their reporting structure, I would say.
Great, guys. This Q&A session, we have to sort of move on to the closure of the whole thing. So maybe we'll take 5 more minutes. Minhal, if you can just walk through the next steps, the takeaways really from this session today. Please, Minhal.
So we would recommend all the attendees to resources we can provide, the guidelines we could provide you to help you in ESG reporting. One would be review relevant local and ESG regulations. You guys could go and review those, understand key reporting frameworks and standard bodies, engage in sustainability consultancies, participate in industry and investor initiatives like these. Monitor index ratings, and there are multiple ranking in the industry that you can go through with. Build on an internal e-learning capabilities for your organization so that you guys can improve with the passage of time, and embed executive commitments with your board, with your management, so that you guys can improvise in the future. How athGADLANG can help you? I'd like Arshad to brief you on that.
Yeah, so without sort of as Osman said, blowing our own trumpet, so we can assist you on ESG reporting. We've worked with multiple organizations on the ESG reporting framework development, and just not that, the back end of how the overall matrix, the overall roadmap also, and the gap analysis we have done for a number of organizations who have sort of interested themselves in disclosing. Training is fundamental, and you would be surprised how much people don't know in your organization. And I think if you put your hand on your heart and ask yourself a question, how much you know about ESG, there's so much written, so much knowledge and information has been thrown in the market. So the board needs to be trained. Your senior executives needs to be trained. In fact, entire organization needs to have some level of basic understanding of ESG. So also we can work with you to enhance the strategies for actual requirements of the environmental and social and governance part of these standards. There are multiple factors, multiple considerations which you have to take into account. With the experts like Qasim and Osman got a very good handle on, for example, on energy area. So depending on which particular sector you operate in, you might have to sort of get in touch with the consultants, and we are building up a full-blown structure for multiple consultants associated with us. So not just reporting part of it or framework development, but also enhancing your strategies to, as one of the panelists has said, that we get yourself into green all across the board. We are also working on building up a product which will help you score yourself. There are a couple of instruments or the softwares out there, but that they don't give you transparency in terms of how their score is being derived. We are building up a product in this regard where you will be able to plug in your questions. You will answer to certain set of questions, and that system will throw out a score, and then will also give you guidance as to what you need to do to improve your score on ESG. And then over the period of time, you will see this will becoming a thing for everybody to do. And we are offering a 30-minute session with our experts. So whoever in this session is interested in a 30-minute session for just doing a health check, really, a spot check of where you are on the journey of ESG, So if you can reach out to us, we will be able to slot in some time with all the experts you've talked to today. Last but not the least is the closing remarks that I think just a reminder, the regulations are becoming mandatory in the GCC. We need to be more proactive to take first mover advantage. Key frameworks like TSFD and SASB and GRIs sort of provide some blueprints. You've got consultants and some software which are already been there, but then you'll see more of that coming out. So sort of watch out for that and sort of watch the space. Global investors, as I said, for multiple DDs, which we have done, have been focusing really on ESG metrics while they're evaluating the investee companies. And sustainable finance instruments are also, tied to verified performance. Organizational license to operate depends on demonstrating how you are progressing on not just the reporting part, but also getting yourself into the green. Beyond risk mitigation, material issues sort of also gives you opportunity to be more innovative, as one of the panelists suggested, that will also add up to your bottom line if you start thinking from wearing an ESG hat on. Just a couple of points before we close. Minhal, can you go to the last slide, please? Maybe come from the bottom.
Actually, I want to add something, because for those participants who have not registered with us, can you please share your email in the chat so we can, distribute the free checklist for you guys?
And the last one, sorry. So Minhal, if you can go. Yeah, and then so you need to think sort of a holistic point of view as to how this overall ESG framework can assist your organization. It's a new thing, and you wear a cold towel on your head. Think about it. It just opens up multiple different dimensions into how you operate today in the world which we are living in today, and given all the changes across from a climate change perspective, and to the social inclusion. If you start thinking from a broad perspective, that those guidelines are so relevant for us today, that it will definitely end up opening up more doors for you. Just a last piece of information. If we go to the last slide, I would like to say thank you, everyone. We've got more than 100 people who have joined this session today, and lovely to have the participants. A number of questions, we will pick it up. The ones which we have not answered, we will write them in an email. What we are thinking of doing, we're just putting up a summary together of the webinar. We've recorded the session. We will put out the summary. We'll piece it out. We'll pass it back to the participants who have sort of joined hands with us. I would like to thank all the panelists. Rehan, Zulqadar, thank you very much for your valuable time. Mr. Qasim, thank you very much for sort of adding up to the overall understanding of the space of ESG. And Osman, both your valuable insights were good. And Minhal, thank you very much for organizing this. You have done an exceptional job of just pulling it all together. And last but not least, I'll thank myself for being part of it. So jokes apart, and thank you very much for everyone for joining the session. And we'll sign out now. Thank you.